So let's take a look here as we look at the side-by-side chart in light crude. And for our new people, we're looking at a 10-year weekly and a 2-year daily. Weekly on the left, daily on the right. And we're looking at cycle analysis, with the bottom being cycle brackets, which are just average lengths of repeating patterns in the markets. And there could be a variance on either side of here by several bars either way. So sometimes you'll see us be giving a projection. Those projections are usually at the midpoints right over here. It could bottom earlier in light crude, it could bottom later in there, and we see that going on in the stock market right now as it's pushing out to what are the very latest projections that we had out into September. So that is the norm, or what we call the principle of variance, that they can vary one side or the other. And it's our job as analysts to use the other information to help us understand what is actually going on. Let's just, if you look just here, I'll keep the side by side up. You can see that was a period of downside risk right in there. And what that meant was that you had these two cycles that were coming to the downside. There was a corrective phase due in both of them. And when you have that downward force of the shorter term holders and the intermediate term holders or longer term holders deciding that it's time to get rid of positions, sell out positions, or aggressive traders to be short in these periods because they see that weakness, then the prices tend to go down. You get help from whatever momentum indicator you use. In this case, our reversal scout is what we're using right here, and that turned negative there, and you can see that the market, that was important information. You'll note where it turned up here. That was the tell. It tells us that this low is in place, and then you get the upside strength from that momentum. So here we're in this period of downside risk. When that happens using multiple time frames, we see the cyclical patterns should be failing. In other words, you get rallies into resistances, and this one did a good job of getting up here into this sell zone. This is the highest sell zone, and then of course comes down and breaks this important low. So that breakdown, as you see, is negative. And once we get this anchor point in here, you get another sell zone. Why is that? Well, because this has got more time to fall. So that means that there's a high probability of failure somewhere in that level. So let me just blow this up right in here so you could see the daily pattern in there. And there you get an idea that you have these rising phases. Now, if you're wondering what that gray cycle is right in there, well, that's a ghosted cycle. That essentially was the cycle right in here, and you could see that low. But then this cycle made its low here, as expected, bullishly, but then broke down and extended out this way. So now we have the challenge of deciding which of these has got the greater impact. And you can see in here where that low came in the rally that the shape of this makes it very clear. See, the momentum turns negative right in here. The slim ribbon PO goes negative. It didn't quite get enough of an uptick to give you a downside arrow in here. That's actually a sign of even more weakness. And then it continues on the downside. Now there's a low due right in here, and that would be somewhere around the 3rd to 4th week of August. Then it would likely rally, and once I get this anchor point, we'll have the resistance zones put in here, and that will be a sell area that would be formed based on the multiple time frames that we're looking at. So momentum conditions negative, cycle configuration on the daily chart negative. That's a negative story. I mean, it really can't be any clearer than that. We believe that the decline over here goes out into October, and therefore rallies should be sells during that period between now and October. Were that to change and an earlier bottom come here in the weekly, the daily patterns would then be they would be forming in a positive way or configuring in a positive way. Like this one right in here was a positive cycle, went a long period of time, and even though it didn't, it had a large decline, it still said that there's a rally phase that should give you a good size rally. So when you get a bullishly configured pattern, it will tell us information that this is shorter on the weekly cycle. Right now, the highest probability is it will go down into October, and rallies are sells.